It's their financial incentive for their client base to not be wanting to put 10% of their assets in Bitcoin.
Hello there from Bedford. How are you all? Welcome to the What Bitcoin Did podcast, which is brought to you by the mighty Kraken, the best place to buy, sell and trade Bitcoin. I'm your host, Peter McCormack, and today I have an interview with Bill Barhydt to discuss Goldman Sachs investor call, which happened this week. But before that, I do have a message from my show sponsors, and don't skip these. It is the sponsors that allow me to do this. So first up today, we have the future of Bitcoin and financial services. We have BlockFi. Have you checked out their new mobile app yet? Everything you expect from BlockFi packed into your phone. You have a quick and easy way to sign up. You can get started in just a few minutes, allowing you to earn interest, borrow USD, and instantly access your portfolio. With the BlockFi mobile app, you can open an interest account and earn money on your Bitcoin, and using Bitcoin as collateral, you can take out a USD loan. The app also enables funds to be transferred directly from a crypto wallet into your BlockFi account, and that's not all. They've got so much stuff coming soon. So many updates coming to the app. If you're interested in finding out more, please do your own research and then head over to blockfi.com, which is BLOCKFI.com, or download the app, which is available in the Apple and Android app stores. Okay, let's also talk about Kraken. They put the power in your hands to buy, sell and trade Bitcoin, and so much growing interest with Bitcoin at the moment. Trading very close to 10K. I think we're going to break through soon. And if you're new to Bitcoin, if you want to dip your toes in, there is no better place to get started. At Kraken.com, it could not be easier to sign up and buy Bitcoin, and they also have a beautiful mobile-first app, so you can buy Bitcoin on the go. They have world-class security. They are the most trusted cryptocurrency exchange on the market, and with their 24/7, 365 customer support, they will help you with any issue you have, whoever you are and wherever you are. There is no better place to buy Bitcoin. Find out more at Kraken.com or download the app, which is available for the iPhone and Android. Just search for Kraken Pro, which is KrakenPro. Okay, so on to the show today, and have Bill Barhydt from Abra back on the show. He's been on a couple of times before, and today we're discussing the Goldman Sachs investor call this week, which took aim at Bitcoin. Now, I'm sure you've seen it. I'm sure you've seen the presentation, or at least the talking points on Twitter. But if you haven't, Goldman held an advisory call this week for their clients in which they listed 5 reasons that Bitcoin is not an asset class or a suitable investment. Firstly, Bitcoin does not generate cash flow like bonds. Secondly, Bitcoin does not generate any earnings through exposure to global economic growth. Thirdly, Bitcoin does not provide consistent diversification benefits given its unstable correlations. Fourthly, Bitcoin does not dampen volatility given its historical volatility of 76%, and Goldman pointing to March the 12th when Bitcoin fell 37%. But yeah, conveniently choosing to mention that oil went negative. And fifthly, Bitcoin does not show evidence of hedging against inflation. This bearish report was both lazy and ignorant, and let's be honest, it was just bullshit. So anyway, I asked Bill, CEO of Abra, to come on the show and debunk this, go through their talking points. So I hope you enjoy this one. If you do have any questions or any feedback, you can reach out to me. My email address is hello@whatbitcoindid.com. Also, if you haven't checked out Defiance recently, I have been launching a new style of show. I've got a couple of mini documentaries up there at the moment. I've got a show all about money. It's called The Money Game, Cheaters Edition, and this week I also published The Future of Technology, The Good, the Bad and Orwellian. That's over at defiance.news. Please check that out. Let me know what you think. Anyway, have a great weekend, and I will see you soon. Bill, good to see you again.
You too, Peter. How you doing, bud?
Yeah, really good. Life is good. Everything's good at the moment. Well, life's good in a strange world at the moment, and lots of strange things going on. Obviously, this pandemic's weird. What's happening right now up in Minnesota's really weird. Trump's executive order that's coming out today is weird. Everything's a bit weird, and outside of that, life's good. So it's really hard to enjoy it because I'm kind of worrying for other people at the moment.
Right. Yeah, I mean, look, we're in a SaaS business, software business, and obviously people who aren't retail, it's tough. And I count my blessings and lucky stars that I've got a team that's all doing well and healthy, and family that's well and healthy. And I know a lot of people have it a lot worse. And so I pray and pull for them, and that we're all going to basically look back on this and it'll be history in a couple of years and not reality.
Yeah, I'm with you. I also, I'm hoping this is some chance to reset right now. There's a lot of things that I think needed a reset. I think education needs a reset. I think healthcare needs a reset. I think money. I mean, we're in money. We think money needs a reset.
Right.
And I think this is maybe It's a bit of an inflection point, really. But I'm hoping a lot of things can get reset. I don't want, when people say, "Oh, I can't wait to get back to normal," it's like I don't want to get back to that. I don't want to get back to a lot of the bullshit before. So
right.
I hope we can come through this with some things a bit different.
Yeah, you don't want the catalyst to be a global pandemic, but we do have structural issues on our planet and the way we do things that are antiquated. You mentioned education; it's antiquated. Banking is antiquated. Money, the money printing is out of control. So yes, I agree. I wish it wouldn't take a global pandemic to maybe catalyze some of these issues into change, but so be it. This is where we're at, and let's see if we can come out better as a society on the other end.
Yeah, I put out a show yesterday on my other show, Defiance, about technology, the good, the bad, and the Orwellian. And in that, I brought out a quote by Rahm Emanuel, who was Obama's chief of staff, where he said, never let a good crisis go to waste. And a lot of people use that negatively with regards to the government, that they won't let a good crisis go to waste, as happened with the Patriot Act. But at the same time, I think also for us as people, we can also not let a good crisis go to waste. I don't know about you lifestyle-wise, but I mean, in 12 weeks, I haven't had to put, you call it gas, we call it petrol. I haven't had to put petrol in my car. I'm barely driving it. My bike's been fixed. I'm cycling everywhere. I'm running every day. I've got a Peloton as well, so when the kids are here, I can exercise.
All right.
We're cooking nearly every meal. We're spending time. There's so much good stuff that's come out of it. And I don't want to go back to the old ways. And I also just thinking, this is a chance to not let a good crisis go to waste. This is a chance to shine a lens on some government stuff and try us as people to change some things. So I think that's what I'm hoping. Yeah,
I think it's very well said, and I genuinely hope that people who are struggling right now, that we are able to help them in a way that just doesn't cause society to have to dig a hole deeper for society, that we can actually help them in a way that moves everyone forward. I do worry about that. I think the way the shutdown was handled in the US and the UK was very poor. A lot of people are dying that didn't have to die. But as you said, for the people who have it better off, I think they're able to at least see this situation as an opportunity to maybe change some of our ways, drive less, more time with family, focus on what's important, express a little bit of gratitude for the employment and the fact that my family is healthy, things that matter. Right, like you said, it helps. If anything, it should help make it clear to all of us what matters and what doesn't matter.
Yeah. Well, we're here today to talk about Goldman Sachs because I think they baited us all this week.
You think? It's possible.
I think so, because it came out of like the headline of what the call was going to be about.
I was being facetious. I mean, they had this report which was all about macroeconomics. And almost like an afterthought, they had this little Bitcoin section at the end, which was clearly a kind of a loaded clickbait smoking gun. But on the other hand, it's very clear that the one or two analysts that did this are very anti Bitcoin. But the primary impetus for their report was to talk about recovery and macroeconomics and the fact that the stock market is looking rosy based on the fact that we've printed insane amounts of money with a lot of cash already on the sidelines.
Well, despite what they did, I actually still take it as bullish for Bitcoin. And I'll tell you why. It's that I obviously have read your report and your write-up on it, and I think you did a great job breaking it down into, rather than going point by point, you actually broke it down into 4 categories. I think you missed one as well.
Okay. What's that?
I think the thing that you missed, not that you missed, maybe you didn't, but I would add into it, is that it wasn't also balanced and impartial, because they didn't make any attempts to talk about some of the good things about Bitcoin. It wasn't like, here's the good, here's the bad, this is our perception, it's mainly bad. It was, here's all the reasons to stay away from Bitcoin. And I almost summarized it as, the reason is that Bitcoin doesn't fit in with their view on economics. Bitcoin doesn't fit in with their, not just them. I mean, look, they're part of the system. They're part of what I call the money game. They're part of the corruption, which allows them to print money and inflate the value of the things that they own and their buddies own. So I think it was just not even in any way impartial, because there are a lot of things they could have talked up and said, look, here's some good stuff, here's some bad stuff.
Yep, that's right. And I think that, And by the way, I don't think this is Goldman. And I actually spoke off the record with a friend of mine who's very senior there and referred to a very specific person who is anti-crypto within Goldman that I believe wrote the majority of those slides. So I doubt there's a groundswell within Goldman where they have a big, strong anti-bias against Bitcoin. I think most people within Goldman are probably interested in what's going on to some degree. And I know firsthand from speaking from friends that do wealth management that they get people inbound who are interested in Bitcoin and they can't service them, which is part of the issue, right? I mean, they're financially disincentivized to deal with it because when a client comes to them and says, I want to invest in Bitcoin, they say, we can't help you. They'll say, go to Abra or go to Coinbase or do whatever you have to do to buy it, but we can't help. And if you look at the quotes that I included from von Mises's famous work, it basically makes the point that an inflationary model is at someone's expense, right? And generally what happens is it's the Goldman clients, the rich, that are getting richer in an inflationary model at everyone else's expense. It's the 1%. And that's why it was intuitively obvious to a subset of the population, which is why we had that anti-Wall Street movement post Lehman, where people were, protesting in parks near Wall Street. And I think this is becoming kind of a circular discussion where it just seems to happen now every few years where the government has to print insane amounts of money via whatever means, QE1, QE75, whatever the hell it is, to basically deal with this issue. And like I said, it's very obvious that it's the uber rich who are effectively, able to reap the vast majority of the benefits of this money printing without end.
Well, it's the privatized profit, socialized losses.
Yeah, that's exactly right.
And it's a Goldman guy now as Treasury Secretary,
which we had under Bush as well. Remember TARP? I mean, that was Goldman driven.
Yeah, it's the funny thing is, it really stinks, right? And maybe it's just me. Maybe it's only because I've been in Bitcoin for a couple of years. Maybe it's always been obvious, but I just feel like they're doing this right under our noses now. We're seeing it being done. I think before it was a little bit more insidious and secret. I feel like they're almost just doing all these things in front of us and just saying, well, we're getting away with it. We're going to continue getting away with it. And I don't understand it, Bill. I'm like, how is this happening?
I mean, I'm not a big conspiracy theorist guy. I tend to try to be practical, common sense. Usually the most logical explanation is the most likely to be true. I'm that kind of a guy in general. And I think that there's logical explanations mostly based around financial incentives for how people behave. Goldman is incentivized to behave a certain way. They're incentivized to support an inflationary system that, like you said, maximizes opportunities for the wealthy and business and socializes the downside via government borrowing. And a deflationary asset like Bitcoin is orthogonal to the very idea of, socializing losses and managing a currency. It's just completely outside of their incentive system. So when you look at it from that perspective, you can understand why they might say that, hey, this is not a good bet, because we don't want people to believe that they need a hedge against the system, because the system is fine. The system is set up so that if we need to print more and inflate the currency and manage the money supply, there's always somebody there as a backstop that's going to be able to do that for us, right? And so therefore, why do we need a hedge? There is no hedge, but they more or less said the same thing about gold, right? They're almost incentivized right now to make the same point about gold that they're about Bitcoin. They just made the point in different ways, where they specifically looked and compared what happened with Bitcoin to tulips and all this other nonsense, which is completely ridiculous because I don't really consider tulips an asset class. And so we've never had a truly new asset class in 1,000 years, as far as I can tell. And Bitcoin represents that. Now, oil maybe, was a new asset in the sense that it wasn't used in the way it was used post like 1940, but still it was there before. Whereas Bitcoin simply didn't exist 20 years ago, and it's worth 100 billion plus now. And that's something that I think for a traditional Keynesian economist is very difficult to put into context versus what they're incentivized to do, which is maintain the status quo.
Well, this is where, when I was going through the slides, I was like, there's just such obvious bullshit in here. So a couple of things that really stood out on the first slide. I mean, when they said it's not an asset, I mean, it's like, how can you claim it's not an asset to begin with?
Sure.
That's your bias on the table. And then it says do not show evidence of hedging inflation. Well, I was like, well, what time frame? Are you picking like a very short time frame here? Because anyone who's bought over 3 years ago almost certainly has hedged inflation.
Sure.
So that's bullshit. And then they start talking about volatility, and the price of Bitcoin fell 30% in one day. But I mean, what did we see happen with oil this year?
Or stocks. I mean, go back to 87 or 98. I mean, pick your poison, right? And so I agree. They cherry picked information there without actually giving everyone a whole picture, which is unfortunate, because even if you wanted to make the point that they're making, which I wouldn't, you could do it in a way that's not biased, and that actually presents, to your earlier point, a whole picture, a holistic view of where this could fit in, right? Here are the risks, here's the upside, here's the downside. And the reality is they don't talk about, they did mention, hedge funds and volatility, but that's not really an asymmetric return opportunity discussion, right? That's a make money whether the market goes up or down and let the hedge fund guys deal with that. When the reality is if you're really looking at what's going on, there's still a massive untapped asymmetric opportunity here for Bitcoin. And for them not to even mention that in any way is disingenuous, it's dishonest. It doesn't actually gel with any reality that I've researched or seen. Their comments about scarcity, sorry, I'm segue into something else, but their comments about scarcity were just pure bullshit. To say that just because we create the coin and use the word Bitcoin in it, that it somehow affects the scarcity of Bitcoin. Well, that's just pure nonsense. MIT college grads are forking Bitcoin all the time. We just don't know about it, right? They're having fun forking it. And I think I use the terms Billcoin 1, Billcoin 2, Billcoin 3 to leave out the word Bitcoin. That doesn't affect Bitcoin scarcity because I just forgot to call it Bitcoin something. Right. So it just shows a complete lack of understanding, or they assume that the readers of their report have a complete lack of understanding. So by basically making an argument that they probably couldn't holistically understand, they would simply assume that Goldman knows better, which is very dangerous.
Yeah. Well, that was the thing when I was going through it. I was like, do they just not know what they're doing? Have they got the wrong analysts on this who's taken a look at it and come to some kind of naive conclusions, which happens, when you're new to Bitcoin. There's a lot to get your head around. And I really like the point that you told people to go and read the report, the document by Matt.
From Paradigm.
Yeah, from Paradigm.
Fantastic.
Because what Matt does really well in there, I think, I don't know if he intends to, but he shows the complexity of how many things you have to get your head around quite early on. It's a lot, My understanding of Bitcoin, I think, still rudimentary 3-4 years in. There's economics, there's game theory, there's technology, there's a lot of things to get your head around. Yep. So I couldn't figure out, Bill. I was like, is this just somebody who's just out of his depth, doesn't really understand it, just gone for some cheap talking points? Or have they started out from day one saying, we need here to discredit Bitcoin and just put people off?
I think
it's the latter.
I actually think it's two things. I think it's Goldman Sachs' version of clickbait. I think Goldman has learned, like everyone else, that you can sensationalize a headline with Bitcoin and get a lot more attention than you would otherwise get. And two, it's their financial incentive for their client base to not be wanting to put 10% of their assets in Bitcoin because they can't service those clients. And so when you put those two together, it's a perfect storm for exactly what they did, which is to basically say, we're going to talk about the recovery, which is going to look like a V, which they're financially incentivized for that to happen. Whether you think it's going to happen or not, I don't. I hope I'm wrong, but I don't think it's going to happen. And they're also financially incentivized to basically say, and when it's happening, don't put your money in Bitcoin for these reasons, whether these reasons are true or not. And that's what we got. And I actually think it was probably one or two people inside of Goldman. It's not now when they send out the report, it doesn't say written by this person to my knowledge. I don't remember the slides offhand. It says this is a report from Goldman Sachs, this group. And so it's representative of, therefore, of Goldman Sachs's beliefs. Now, I actually don't believe that. I think it's representative of a couple of these very specific analysts. And I actually believe I know the name of the primary person, but because I don't have proof, I'm not going to say it. But I think it more or less comes down to this one person. And I think it's a she, and she just doesn't like Bitcoin for whatever reason, which is fine. I mean, there's lots of people that don't like Bitcoin, but they also don't write about it and put the Goldman Sachs header on it. So, right. So at that point, if you do that and you're in my, and you're in my way, you either get out of the way or I'm going to run you over, which is, what I chose to do in this case. But anyway, long response to your comment. I think that's what's going on. I think they understand, like everyone else, there's a certain amount of clickbait to be had in the Bitcoin space, for better or worse, often for worse. And they combine that with what they were going to do anyway, which is their economic outlook for, post recovery.
But we had this with JP Morgan. I mean, they were the same a couple of years ago, Jamie Dimon writing it off. And look, we've seen this year, their incentives have changed now. They're now doing business with Bitcoin companies. They're providing banking services.
Sure.
And so I guess at some point, either Goldman's, there'll be a push or a pull, right? They'll be pushed or pulled into being involved in Bitcoin. But I still think it is an inevitability for them. I think it's an inevitability for anyone.
I don't know. Look, I think that I consider Goldman Sachs to be a trailing indicator when it comes to technology. I went through this in the early 90s when I was first getting into commercialization of the internet, Netscape and other places. The internet analysts, around the time of the Netscape IPO or beforehand, were very bearish on the technology. It's porn and gambling. Sound familiar? Yep. Here we are all over again, and I consider them still to be a trailing indicator. And so in that regard, it doesn't really mean much to me personally, except that it has an undue influence on people that don't have that perspective, that don't understand exponential technologies, because the analysts are telling them that they don't understand it. Like the same people that say Tesla's stock price is bullshit. Those are the people that don't understand exponential growth in battery supply chain and electric cars, et cetera, et cetera. It's the same people that don't understand that we've never had a fundamental change in the way money works. Software is eating the world except for money. Well, guess what? Now it's finally happening for money. And they don't want to accept that. So, they're always going to be a trailing indicator as far as I'm concerned.
Yeah, I think that's a good way of putting it. Well, this is a chance to debunk it all. And let's go through, because like I say, you've got 4 key areas. And I think it's important we cover each one at a time. So the first one is that they just do not understand or want to acknowledge what a deflationary asset is or eventually happens. And I think what's very interesting is what you put in there, because you did talk about the Ludwig von Mises, how he lays out the fundamental truth of monetary expansion. Yeah. And I'm going to quote the quote that you put in, just so people can hear it, because this actually made me rethink something.
I'm not bringing a tear to my eye, but you go for it. I don't want to get emotional now. It's kind of early in the morning.
Well, I tell you why it was interesting for me, because I was always like, inflation is just a natural part of the economy. Then I came into Bitcoin, understand a bit about Bitcoin, and then started to realize, actually, if you're a saver and you're prudent, deflation is actually good for you. So started to think, are we being positive about, should we be positive about deflation? But the quote here itself, economics recommends neither inflationary nor deflationary policy. It does not urge the governments to tamper with the market's choice of a medium of exchange. It establishes only the following truths, which are listed. And people can see them. They should go and read your article. But the point being is that it's neither. And it's just that the market should be left to itself. So I think it was a really good thing that you identified this, but we still have kind of like inflation Stockholm syndrome.
Sure, because we don't know. Well, we have all been in the West, pretty much globally now, even in communist China, indoctrinated into this idea that money is a government-created asset, which at one point was backed by gold, but doesn't matter. It's a government-created asset where government, via some voodoo magic that they understand, that we're not really privy to understanding because we're not smart enough, controls the supply of that asset. And again, indoctrinated into the idea that that's the way it's supposed to be and that's what's good for us. Well, who the fuck decided that? Right? So all he's saying in a much more eloquent way than I'm ever capable of saying it, no, we made that up, right? It doesn't have to be that way. You can decide to keep it that way. If that's what everybody wants, so be it. You get what you get. If you do it the other way, which is to say there is no government money, there's just, let's say, gold coins, which is what we had in Roman times, I believe, then you have what you have as well, right? But either way, we made it up. And what he's saying is that maybe deflationary policy is better because you're actually not inflating somebody's wealth or making inflating the treasury at the expense of the ignorant, right? Which I think is the problem with that point is it's the very people that are getting hurt that are the least likely to truly get it, right? And that's the problem, I think, ultimately with inflationary economics. Nobody gets it until it's too late. Ask a 75-year-old person in Argentina if they get it and why. They may not be able to use the terminology of Ivan Mises, but they intuitively understand what we're talking about because they've seen their currency fail, 3 times in their lifetime?
Yeah, at least.
Right? At least, right?
And it's happening again right now.
It's happening again, exactly. Americans have basically gotten a free ride on this idea that, the military-industrial complex has preserved our role as a global reserve currency. But that's failing in front of our eyes. We just don't want to accept it. And it's going to be ugly when it's done failing. And that scares the hell out of me. And I don't necessarily want it to fail. I want my children to live in a, happy, healthy place. But right now, I don't see how it doesn't. And that scares me.
Well, I think it's because a lot of us haven't experienced hyperinflation or mass inflation. Mm-hmm. We've always tended to experience this 1 or 2%. And actually, this is the bit that made me laugh. I don't know if this kind of stood out to you, but on the very first slide about sovereign currencies, they dropped in there, a store of value is an asset that can be saved, stored, and exchanged in the future for a predictable, stable value.
Yeah.
E.g., with 2% annual inflation, a nominal dollar today will be worth 82 cents in 10 years. So they're actually saying, right in front of your face, that this is a store of value, but you're going to lose, 18% of it. And there's no argument whether it's good or bad. It's just like, this is going to happen to you. You're going to lose 18% of your wealth over 10 years.
Well, it's just ridiculous. I mean, put hyperinflation aside for a second, right? I mean, normal inflation is death by a million cuts.
Yeah.
Because if, the only reason, in my opinion, why there isn't rioting in the streets around how inflation works is that as your money gets eroded in value to zero, most people die, right? Now think about what's going to happen in the next 50 to 100 years, pandemic aside, right? Lifespans are going to increase dramatically. We're approaching a singularity moment via, computing power, right? We don't know what's going to happen when computers are able to basically figure out problems at a rate that's way faster than a human ever could, right? I think lifespans could go to 125, 150. Now, what happens when money starts getting eroded at 1.5% to 2% a year in value, but for a much longer time frame for the average person? It's going to become much more acute that the value of what you have in dollar terms is going to go to zero. So I don't think that the dollar system is tenable when you have people living in a much longer lifespan. I really don't. I don't think it's tenable even without that. I think it becomes much more acute that it's, happening. The only difference is when it's hyperinflation, you can see it happening in front of your very eyes, right? Like going down a roller coaster, as opposed to, puttering along the highway in LA. But live 150 years, and then I think people are going to say, this doesn't work for me anymore, right? Because what am I saving for?
Yeah. Well, I do also think some people haven't joined the dots. Well, I know they haven't, because I think we're really exposed to this by being in the world of Bitcoin. But if you're not, a lot of people don't really think about money in great detail. I know because I've talked to friends about it. You ask what inflation is, it's like, well, it's the cost of things going up. But they don't always join the dots. That means that any savings you have are losing value.
Right.
I don't think people actually realize that. Or if you're not getting above inflation pay rise, you're losing money every year. Some people don't actually join those dots, and they don't even realize. Yeah, I made the point. Look, inflation is just another tax. It's a hidden tax, but it is another tax. Somebody came back and said, no, it isn't. Right.
I came up in the fixed income economics world when I was at Goldman. And we always learn about the time value of money. And in hindsight, I was basically fed a complete bullshit story. Well, the time value of money, I was taught about it like a law of mathematics almost. Like, this is the way it is. And in hindsight, that's not the way it is. Like, that's the way you made it up. But I wasn't taught it that way. Like, I wasn't taught to believe you basically apply a discount factor to the value of money to get a net present value over time because you erode its value. It doesn't have to be that way. So I do believe that there's always a time value of money, but the time value of money doesn't have to erode over time, right? That's something that, like I said, that we arbitrarily made up. So I think Bitcoin, to me, is brilliant, not only in its technology, in that it solves the double spend problem, but that it's opening people's eyes to Austrian thinking of what a deflationary asset could be. And the brilliant people that wrote about deflationary assets before we actually had one just blows my mind, right? Yeah. And now we're seeing that playbook play out the way they predicted, which also blows my mind.
Yeah, I mean, that's one of the great things about Bitcoin. And actually, it's been really interesting with my children. I don't know how much your children have picked up some of this stuff by kind of like osmosis in the background, but my son certainly has. And he asks some really interesting questions about stuff like this, which one of the great things for me, one of the best things that's come out of this experience, it's not the fact that I discovered a better form of money. It's not that. It's that I opened my eyes to understanding about economics, understanding the role of government and really corruption within government. And it's the red pill. It's the red pill moment. I just did an interview with Daniel Buckner, and I said I haven't really been red pilled. I've almost had an intravenous drip of the red pill, and I'm just slowly over time getting more. But I like the world it opens you up. It's like this educational program you go to, and this rabbit hole of new ideas that you have to think about. Almost like I didn't vote in the last election because I realized I don't want to be part of that anymore because it's just part of the same game. I just didn't want to. I mean, there wasn't a candidate worth voting for. And now one of the books I've got downstairs, which I started reading, which is it's all against democracy. I've grown up with the belief that democracy there's the best thing, and democracy is better than a dictatorship. But is there something beyond democracy that's better? And maybe there isn't. Maybe I won't find it. But the fact is that Bitcoin's taken me on this journey to start thinking about these things.
Yeah. I don't know. It's tough. I mean, look, I'm not an anarchist. I believe in right-sized government. I believe absolute power will corrupt absolutely. And I believe absolute power unchecked will simply feed on itself into a positive feedback loop. And I think we do have in my government in the US here, checks and balances that, thank God, have saved us from people who have tyrannical tendencies. But on the other hand, it's getting out of control. I mean,
it is.
Financial regulation in our country is a mess. There's upwards of 100 regulatory bodies in myriad financial services in the United States. Nobody can keep track of it. And it's a regulatory racket, right? You've got lawyers at one agency that basically leave and go work at private practice. And it becomes like a circular racket where basically they all get to eat, at the expense of the average consumer who perceives no value from any of it. And it's a shame, right? But
I was just going to say, and I think the ultimate kind of signal of this is the Treasury Secretary, Steve Mnuchin. I'm doing my own research into him a lot at the moment. He was head of mortgage services at Goldman Sachs. He was one of the architects of the 2008 financial crisis. Goldman Sachs then shorted the market.
Yep, that's right.
And then he leaves Goldman Sachs and sets up a bank. And the bank ends up becoming a foreclosure machine, because financially they're incentivized to foreclose on people. So the people who he took the homes from, the people who lost their homes through the crisis that he was an architect from, he then helped foreclose on them. And now he's Treasury Secretary, somebody who's meant to represent the people, saying, whilst flying around on private jets and his wife wears very expensive jewelry and designer clothes, saying that people should be able to live on $100 a week. I mean, I think it's beyond gross. Anyway. Next up, I talked to Bill more about the Goldman Sachs report on Bitcoin. But before that, I do have a message from my amazing sponsors. So it's going to be a final shout out to Least Authority. Thank you so much for sponsoring the show. Please do go and check them out. Now, this one is for you techies out there, the builders creating applications. Least Authority is a security consulting company pushing the limits of how to build privacy-respecting solutions. They specialize in security audits, design specification reviews, and security by design, while also making regular contributions to the open source and decentralized space. They can help you improve the security of your wallet application, key management solution, layer 2 protocol, P2P network design, use of cryptography, and much, much more. If you would like a boost for your security strategy, you can arrange a no-obligation call to find out how Least Authority can help your next project. Just head over to their website, hit the schedule a call button, and that's at leastauthority.com, which is leastauthority.com. Also, Sportsbet. Have you checked them out yet? The best place for online gaming, and guess what? They accept Bitcoin. We also have sport back on the agenda. The Bundesliga is back playing. The Premier League is coming back soon. We have an announcement date. I cannot wait for the Premier League to come back. Liverpool to start their title and Tottenham to keep losing. Now, to celebrate the Bundesliga coming back, Sportsbet has a Bundesliga Super Streak Challenge. If you win 10 bets in a row before the end of the season, you can walk away with 100 MBTC in cash. That is 0.1 of Bitcoin, and for you sat stackers, that is 10 million sats. If you want to find out more, head over to sportsbet.io, which is sportsbet.io. Also, we've got another Sportsbet poker tournament coming up. Keep an eye out for that. I will be announcing that soon. And also, lastly, this week, and ending their sponsorship for the month is Crypto Mining Tools. Big thanks to Scott for supporting the show. Let's give him a boost. Let's go and check them out. Now, with the Bitcoin halving behind us, we know it's going to have an impact on mining profitability. And Scott from Crypto Mining Tools has a solution for Bitcoin mining equipment owners looking to get a little bit more life out of their miners. Now, I told you before how Scott had a Bitcoin mining calculator. Well, Scott has recently launched a Bitcoin mining hosting directory. If you need to move your Bitcoin miners to a more cost-effective solution due to the halving, just head over to cryptomining.tools to research hosting options available in your country and around the world. Scott is also looking to add more hosting and co-location providers to his hosting directory. So if you've got a mining farm, if you've got some extra space, you want to get that filled, reach out to Scott's hosting partnership development guy. That's Shannon Squires. You can find him on Telegram at Squires, which is SQUIRES, or you can use the contact form at cryptomining.tools. Point two. Back to debunking for Goldman Sachs. Point two is that they didn't want to acknowledge or understand the true nature of Bitcoin's scarcity. The belief that if you can create another fork of coin, that you've created more Bitcoin, which is such a basic mistake.
This was probably the dumbest point that I came across. And I had to read it a few times because I just couldn't believe what I was reading. That they would really say that Bitcoin is not scarce because you can create an infinite number of forks. To a certain degree, I'm not even sure what to say, right? Because it's just like, oh my God, you just don't understand. And I also think to some degree they do understand, because otherwise they're just really dumb. And I think that they have readers who aren't exposed to Bitcoin as much as they are, who won't understand the nuance of what they're saying and will simply believe them, right? Because it further entrenches their point that they shouldn't be buying Bitcoin, which helps them since they can't offer them to buy Bitcoin. And so it's obvious to anyone who studied Bitcoin that a hard fork of Bitcoin just doesn't matter. It's just more software, right? And the fact that Bitcoin is a matrix. It's being inside a matrix. If you choose to copy the matrix into another computer, that's your problem. That's your deal. Go do it. MIT grads do it all the time for fun on the weekend. That's how they roll. It has nothing to do with the Bitcoin matrix. Right? And if you choose to live inside the Bitcoin matrix, it is provably scarce today. Yes, there are ways to change the scarcity. If people decide that Bitcoin should have 42 million Bitcoin instead of 21, it is possible to fork Bitcoin to do that. As we saw with the 2x debate a couple of years ago, that is highly unlikely to happen. I mean, highly unlikely to happen, right? And so it is in its current state provably scarce. And if somebody or a group of people on the network were to create a version of Bitcoin that became the Bitcoin that made it unscarce, its value would plummet. And that's fine. That's probably the way it should be. And they did not in any way recognize that. They said the opposite of that. which just blew my mind.
I mean, we all know that Roger and whoever forked Bitcoin Cash, and then we have the fork of Bitcoin SV.
Yeah,
but we all know the fatal flaws that Bitcoin SV is highly centralized and is essentially led by a couple of crooks.
That's fine. I don't really care. I mean, we could all have our opinions on it. It doesn't matter to me. It really doesn't. I had this discussion with Saif on an Abra podcast where we talked about the spectrum of decentralization, and it's almost impossible to create a new decentralized currency because Satoshi was able to do it in a way where nobody knew what she was doing in the very earliest days, which is fine. I get that. But that doesn't really matter. They could all be crooks. Let's assume 100% of people forking Bitcoin are crooks. Or let's assume 100% of them are unbelievably honest people. Either way, my point is still the same, right? The scarcity of Bitcoin remains untouched, unscathed, provably correct in today's form, regardless of what everyone else does with their bullshit fork. It just doesn't matter. Right. And actually point 3 to segue for you is more or less a continuation of point 2, which is to say they don't understand the nature of hard forks or are purposefully ignoring what a hard fork actually means. I mean, they said, I'll just read it to you. Individual currencies have limited supplies. Crypto as a whole is not a scarce resource. And then they listed hard forks to prove their point. What the fuck? I mean, it's just, again, if I go out and fork Bitcoin and create Billcoin 1, Billcoin 2, Billcoin 3, that does not affect the scarcity of Bitcoin at all, right? I cannot even believe, like I said, that they wrote that. And the only conclusion I can come up with is that they don't want people to understand the true nature of Bitcoin's scarcity in its 21 million form, and the fact that it asymptotically approaches 21 million out to infinity, because they are financially incentivized for people not to understand that.
Well, scarcity is a thing people have to get their head around as well. Prior to Bitcoin, I'd never considered gold as a scarce asset, which is why it had value. I thought gold had value because people wore it as jewelry. That was just my assumption. It's jewelry and it's expensive, and it's kind of interesting. I'd never really gone into the whole scarcity. I'd certainly never looked at a stock to flow model before.
Right.
And I think scarcity is a tough thing to get your head around. But I think if it's almost a thing that if people understood first, it would be easier to convert people into Bitcoin.
Mm-hmm. Maybe. I came up through fixed income. We didn't focus on stock to flow. It was all about interest rate movements, right? So I think for me, I get that gold is scarce and that Bitcoin is potentially infinitely more scarce over time, which is a very, the idea that you can have an infinite stock to flow ratio is a very hard thing for a lot of people to get their mind around. The stock to flow is a very simple concept. How much do I have? How much do I increase it by at any given time? That's my stock to flow. And if I'm increasing it by 0 over time, in theory, my stock to flow should go to infinity, which should speak volumes for the value of that asset over time. But that's orthogonal and to every idea we've been taught about economics and money in school and assets. And so, it goes back to point 1 about, why we have an inflationary asset versus a deflationary asset. To von Mises's point, well, we made it up. We chose to make it up in a way that hurts the masses, versus the treasury. And, anyway, this whole point about forks was so infuriating to me. Not so much that they got it wrong. I think it was purposefully misleading to their own benefits.
Yeah. All right, let's get to the last point. They associate Bitcoin with scams and Ponzi schemes without acknowledging the internet's own sordid past and beginnings and parallels to Bitcoin's own potential market maturation. And that's a really important point, because porn has always innovated with tech.
Absolutely. I mean, if you look at online video, internet.com sites, even credit card processing, to my knowledge, the first major credit card usage online was porn. I'm not saying I love it. I'm just saying it is. And so it's simply been diluted over time with everything else we use the internet for, learning at home, Zoom, whatever, Netflix, whatever the hell people are doing, which is fine. I also don't have a problem if people want to use porn, go do it. I don't care. My point is that, all these sordid things are there for a reason, and they're there because a lot of people use them. whether I like it or not. And I don't really have a problem with online gambling. I don't do it. I'm not interested in it. But if people are, have at it. I could care less. Anyway, it's silly, but it also reinforces what I said earlier to me, which is that this is exactly how tech analysts looked at the internet back when Netscape went public, and in my mind, as a result, remain a trailing indicator for where this is going. So if you want leading advice as to where this stuff is going, you're not going to go to Goldman Sachs, right? There's people like Cathie Woods, for example, who I just adore. She talks about exponential technologies. She follows Bitcoin. She follows in her ETF work, Tesla, Nvidia, companies that grow exponentially, where she's a leading indicator, right? In the Wall Street world, there are leading indicators out there, and Goldman is not one of them. So if to put this a positive spin on this, there are places you can go that aren't just our kind of self-reinforcing, let's call it Bitcoin bubble, that will tell the truth about where things are going with their own financial incentives, as opposed to the opposite, which is what Goldman is giving us.
Well, this was their big scary slide, right? Let's be really scary. So they talked about Plus Token, but Plus Token isn't a fault of Bitcoin.
It just doesn't matter.
Yeah.
It just doesn't matter. I mean, yeah.
But the two things that really pissed me off, this really got to me, where I got angry. The first one was money laundering. Like the banks themselves haven't been involved in money laundering themselves.
Not only that, the biggest money launderers in the world are U.S. banks. Yeah. I've had this conversation with U.S. regulators, the OCC. Like, I've literally said that to executives at the OCC, and they look at me like I've got three heads. Like, who the fuck is this guy? And how could he possibly say that to my face? And I said, well, get your heads out of your ass. Everybody knows it. I'm not saying it's good or bad. I'm just saying it is what it is. So the idea that you would associate Bitcoin with money laundering as Goldman is just a complete joke.
Yeah, and also I come back to this point often. Well, I actually think if I was going to commit a crime right now and I had to move money around, I think Bitcoin would be one of the last things I would choose.
Oh, absolutely. Absolutely. I mean, look at the FBI. I mean, they love Bitcoin. They love Bitcoin because, it creates more traceability in a bearer instrument than traditional cash. The equivalent with cash would be taking the serial number of every dollar bill, putting it in an Excel spreadsheet, and making sure that everybody told everybody else the serial number of the money they were using. That's more or less what happens with Bitcoin. Right. But I hesitate to say that because I don't want to give them the idea. But that's more or less what Bitcoin does. I'm not saying it's good or bad. It just is. And that makes it highly traceable if you know what you're doing. Now, I'm not suggesting that I like all these services that go out and trace what's happening with wallets. I wish they would just leave everyone alone, but they're there. And it's proven that it's traceable. So to say that it's useful for money laundering is just crazy.
Well, and the last thing that did, this is a personal one, but this other, it's a tougher one to explain to people, but the darknet market thing annoyed me. I'll tell you why it annoyed me. Firstly, it was my introduction into Bitcoin. Both times, actually. First time as somebody who wanted to go to the Silk Road to get some things. But the second time, obviously, I've talked about getting something for my mother, right? Now, I understand there's some horrible dark markets out there selling vile, horrible things. But there are dark markets out there. I think sometimes the name dark market and the darknet market is actually also misleading. They should be called a liberty market. Like if you wanted to buy, I don't know, drugs, I think it's a liberty market because it's allowing you to do something you want to do.
Right. Or the worst named law in U.S. history is the Patriot Act. There's nothing patriotic about it. So why don't we just call them Patriot markets? Yeah.
Patriot markets.
Yeah.
But that one annoyed me. But then the whole slide, I'm like, this slide here is just here to scare the shit out of people. And look, this whole thing, it was a bait. It was a bait. I got baited. I was like, amazing. Goldman are going to be talking about Bitcoin. Finally, they accept it. Finally, they understand it. And then out it comes. I was like, oh, fucking fuck those guys.
Right. I did a TED talk on Bitcoin. I think it was 2012 or it was very early. And yeah, it's the first one.
I didn't know that.
Yeah, and it was trading at about $2, and it's online somewhere. But it's
I gotta find it.
Yeah, it's not a very good recording, but it's out there. And I had never used Silk Road, and I had never even used Tor at the time. And so I had to figure. It was really hard to install. I couldn't, and I have a degree in computer science. I'm a pretty smart guy. This took me a really long time to do. You got to be motivated for this shit. And it was my first introduction to the dark net. I actually had Bitcoin already, but I hadn't actually used the dark web. So it was fascinating, and it was part of what was fascinating to me was how hard it was to do. It wasn't easy, but to your point, there's hundreds of thousands of people doing this every day. And there's a reason why, because they feel that they have the right to do this and they don't want government telling them that they can't. And look, outside of, I believe that people doing child pornography online should go to jail. I believe that. I know there's a lot of anarchists out there in the Bitcoin world that don't believe that. I think they're fucked up in the head. But that's what I believe. But I think there's a lot of things that happen on the dark web that people should simply be allowed to do because they're not hurting anyone, except maybe themselves. But I don't need the government to tell me if I can or can't hurt myself. And that's the difference in how I look at it versus I think a lot of the other anarchists who think everything should be a free for all. But so to your point, I think dark web is probably a misnamed like a virtual place on the internet.
So I think we can conclude this by saying fuck you, Goldman. Just fuck off.
Yeah, I don't know. I'm in the Goldman alumni group. I don't know if I'm going to get thrown out after this, but it's okay. My guess is if I choose to give them my money, which I don't right now, maybe they'll still take it. So
yeah, you're one of us. But look, you've been around this for a Bitcoin thing for a lot longer than I have. You've fought in the trenches and been through the mill more than most people. Like, how do you feel about where we are right now, Bill? It feels like there's a lot of weird shit going on in the world. We talked about that early on, and it's almost like we're very lucky to have Bitcoin alongside all this kind of weirdness going on.
Yeah.
How do you take it all in now, having been in it for so long?
It's so early. We've never had a new asset class, like I said, in any of our lifetimes. I love the updated cross-asset stock-to-flow article that Plan B published, which talks about, he has this idea of clusters. I have the link and the graph, the key graph in the article I published yesterday. And he basically equates those clusters to use cases. And cluster one was a proof of concept where there was probably 100 people, a couple hundred people that really cared. Payments, which was really dark web, was the second cluster. We're in this third cluster now, which is e-gold. And by definition, when it's being hoarded by a relatively small number of people. And this manifests.
We're in cluster 4.
I don't think we're really in cluster 4 yet. I think we're transitioning into it, if I understand correctly. I'm not sure. I may have that a little bit wrong.
Yeah.
But I think the point about e-gold was, if you look at volumes post 2017, trading volumes were very muted. And the price was driven by the fact that there simply weren't a lot of sellers, period. Are there buyers? Yes or no? But there aren't a lot of sellers because most people are holding. Even today, that's the case. If you look at the volumes right now on exchanges, they're not huge by any standard. It's just that the sellers are pretty low, and we'll see any given day how many buyers there are. And if it really moves into that financial assets cluster, like she's predicting, I think all models are wrong. Just some are more useful than others. I fundamentally believe that his model is wrong. I just don't know how wrong. If it turns out to be useful, look out, right? I mean, we're in for a hell of a ride, but it's the best model I've seen, which makes it super interesting to me. And so, yeah, in that regard, I think it's Bitcoin's got a very interesting 5 years ahead. Very interesting.
What's cluster 5?
Oh God,
because that's what I've been thinking about that
reserve currency.
Mm-hmm.
If it's reserve currency, look out. Right?
Yeah, I know.
Yeah.
It only has to take one state to do it as well.
Yeah. I don't know that it has I guess, layer 2 and layer 3 would deal with its ability to move around in large quantities to make it a reserve currency. In its current form, it wouldn't work as a reserve currency because you just can't move enough of it across enough entities in real time. But if it evolves in that way, I can certainly see it happening.
Yeah. Perhaps maybe on Liquid.
Maybe. I think even that's very early. I don't think we fully have realized the kind of banking equivalent stack for what layers 2, 3, and 4 would have to look like to make it a global reserve currency. But I think a lot of smart people smarter than me are thinking about that, and that's great. That's going to take another 10 years.
So what do you think are the most important things now? Like, where's your focus in terms of the next 5 years for Bitcoin?
Well, at Abra, my focus is making it super easy for the average person to buy, hold, trade, invest in Bitcoin using their bank account, using other stable coins, whatever they want, anywhere in the world. We have customers in 100 countries. Just new products from us this year. People are able to generate interest on their Bitcoin, people to borrow against it. We're doing institutional lending now for people who want to make high yield on their Bitcoin. Kind of creating our own banking stack for Bitcoin, but in a very safe, secure, methodical way. And we've been at it for 5 years. So, our million plus wallets are growing at a steady rate. And it's to us, it's a very long marathon. And we're committed to being a key player in that ecosystem and continuing to innovate and drive value for people, and hopefully getting closer and closer as we go to the average consumer, because it still tends to be more of an initiated person as opposed to an average consumer. And I think that at the end of this next 5-year cycle, we'll be much closer to the average consumer. Whether they know they're getting Bitcoin or not, we'll see, but I think that's where we'll be.
And how are you enjoying getting into the podcast game?
Look, I mean, we do it for Abra. You go way deeper. But I enjoy it in the context of we have a lot of loyal users. Mm-hmm. We get feedback from them on what they're interested in, and we focus and go very deep on that. And we don't really do anything else. And so in that regard, I'm happy to do it. And
but are you enjoying it?
I do. One, because it's generally topics that I'm interested in. Uh-huh. And it breaks up the average day for me as a CEO and dealing with all the stuff that a CEO has to deal with, whether it's people's personal issues or the company's revenue or product planning. It's a good kind of mix for me. We only do one every couple of weeks. And so sometimes we cluster them and then release them on a stage way. So it's not like you where you're probably doing multiple a day sometimes. I just don't have the time for that. So that actually makes it even more enjoyable because we get to pick and choose the things that are probably most enjoyable to our more focused audience, where you have a much broader audience, right?
Of course, yeah. Is everyone, I guess your whole team's remote right now?
Of course. We've been remote for almost 3 months.
Yeah.
Yeah.
Do you think you might stay that way?
I would love to, but I'm not speaking for the whole company. I don't know. It's a good question.
It's one of those reset opportunities, right? Where...
Yeah, I'll tell you where it gets tough. You and I have teenagers.
Yeah.
I have employees with infants. They have it tough, right? So being there in the house full time with an infant with the outside help that you had paid before, being unable to help and still maintain a full-time job, that's not easy. And so I think those people would be glad to have an office right now.
Well, yeah, even with a 10-year-old and a 16-year-old, there are multiple times in the day I'm having to stop my work, go downstairs, say, can you stop fighting? Or can I help with the homework?
Or stop screaming at the video game, in my case. Yeah.
Well, there's that. And what do you want for lunch? And then also just, I have to take them out. We have to go out and do something every day. So my 8-hour day is becoming a stretched kind of 15, 16-hour day. But look, this has mainly been good, so I don't really want to whinge about it. But I did this other show, and I spoke to Sam Lesson.
Oh, he's great.
Yeah, he's really, really great, really interesting guy. But he was saying a lot of people aren't going to want to go back to the office. It might not completely go. It might be people go for 1 day a week or 2 days a week because they want the interaction. But companies aren't going to need these huge leases anymore, which might change the whole geography of cities.
Right. Yeah, I mean, it's interesting that you use him as an example because, we've spoken in the past, and he's got a beautiful house right smack in the middle of San Francisco. And that's an example of a place that's become a disaster as far as I'm concerned. And this may be the beginning of the end for the current model of San Francisco, where all these big unicorns just don't want to be there anymore because their employees are like, fuck this, I can't afford it. There's homeless everywhere, and drugs in the streets, and this used to be paradise, and it's become hell on earth for a lot of people, which makes no sense, and it doesn't have to be that way. And so, not to pick on San Francisco, there's a bunch of places that I think are facing this.
Yeah,
and
but San Francisco is particularly unique. I've noticed it going over there for. I mean, I first went there. How old was my son? So I was 30, 11 years ago. It was great. I had such a good time. It's beautiful. And every year I go once or twice, and it's just got worse and worse. And the last time, I discovered the tenderloin, which I feel dreadfully sorry for anyone's homeless, anyone's got a drug problem. I've got nothing against it, but and not only did I run through the tenderloin, I was like, well, what the hell is this? But also, just outside shops on main streets, I saw people, I saw one guy who was just off his face shouting at the street. Like, there was no one there. He just didn't know what he was doing. And it's just not something you can cope with. There needs some support infrastructure around it. And I don't know, I just feel very sad about what's happened to San Francisco.
I do too. I moved here, I think it was 1990 when I was working at NASA, going to Stanford, and I couldn't believe it. I'd never been west of the Mississippi in my life. And I got to California and San Francisco, and I was like, oh my God, it's paradise. And it was right after the earthquake where there was significant damage. That Beach Street area by the Palace of Fine Arts was all destroyed, but it was still beautiful. And now I walk around like the south part, like Soma, Tenderloin, even Hayes Valley now, which even 2 years ago, Hayes Valley was fantastic, overrun. And there's this, I hate to say this, but there's this liberal, progressive lack of tough love. Over the last 10, 15 years, the kind of progressive liberal mentality has basically played off the tech company boom, which wasn't San Francisco based years ago. It was more in the peninsula, right? And it was supported by suburbia. When it moved to the city, the progressive liberal mentality basically couldn't handle the tech boom. And there was no tough love that it takes to manage a city. Like Giuliani in the mid 90s or early 90s in New York, he may have become a nut in the last few years in many ways, but he changed he changed the city. If you want to live in a city where everybody's on top of each other, you have to play by a different set of rules than when you're in an environment like I am here, where everybody's spread out, right? Don't live in a city and agree to live on top of a million other people if you're not willing to play by stricter rules. It makes no sense. It makes no sense. But yet San Francisco has this live and let live policy that makes more sense for Montana than it does for the Tenderloin, right? And until the liberals in that city change that mindset and agree that they need more tough love to manage their city, it is going to continue to get worse, not better.
Yeah, it is such a shame. And you're right about New York. The first time I went to New York, you didn't really go to Brooklyn.
Right.
I mean, you could, but you certainly wouldn't go at night.
Yeah, that's right.
The last couple of times I've been to New York, I actually prefer to stay in Brooklyn now.
Well, my family's from the Bronx, and I would go into the Bronx as a kid to visit my grandparents. And in the late 70s, it was horrible. I mean, that whole Bronx is burning. It was a real thing. And I remember when we had the rolling blackouts and the riots and looting, and it slowly got better. And it really culminated under Giuliani's broken window policies, where the city got the tough love that it finally needed. And a lot of liberals said, hey, this is unfair. It's unjust. You're treating homeless horribly. And the reality is they weren't. There were programs in place to help the homeless. It's possible to have both. You can have tough love and you can care and basically do what's right by people who are less fortunate without basically creating this cesspool of nonsense that has basically pervaded San Francisco.
Yeah. Well, listen, I hope it changes, because I love San Francisco and I love California.
Same.
And I'm not going to stop going there, but it just, I don't know, I just don't get it as excited anymore. So I'm like, oh, where am I going to stay?
Yeah.
I actually even considered last time staying over the bridge in Marin, just for something different, because I like it over there. And I think if I lived there, that's where I'd probably live. But all right. Well, anyway, look, Bill, this was great. I'm going to get this out tomorrow. We're going to debunk Goldman Sachs. Fuck those guys. It's good to see you. I'm sorry we're not doing it in person, but I'm sure at some point when the planes are going, I'll be back over and
it's always great to see you.
A steak.
Yeah, I'm looking forward to watching you next week on Ryan's conference. So
yeah, Monday, right?
Yeah, I'll be watching.
Get my shit together with that. So great.
Yeah,
all right. Well, listen, look, have a great weekend, and I will see you soon.
Thanks, Vigo.
All right. What did you make of that? Did you enjoy that show with Bill? The level of misinformation and ignorance in this Goldman Sachs presentation investment call is pretty funny. It's a sort of fad we have become used to seeing and debunking in the Bitcoin world, but I was personally surprised how amateur it was, and I think Bill was too. Now, while Bill suggested that this is really the opinion of a particular analyst rather than Goldman as a whole. It is clear there's still a large number of people in the traditional finance world that just do not understand Bitcoin or refuse to take the time to get in the weeds and understand it like maybe we have. Or perhaps they are just spinning their own narrative to benefit themselves. Anyway, I really enjoyed this discussion. Always like talking to Bill. He did a great job of debunking the bullshit in this presentation. If you've got any questions about it or any feedback, you can reach out to me. It is hello@whatbitcoindid.com. Also, go and check out Defiance. I've been releasing some new style, like mini documentaries on that. I've got the Money Game Cheaters Edition and the Future of Tech, the Good, the Bad and Orwellian. That's at defiance.news. Please do let me know what you think. If you've got any questions about the show, you can reach out to me. It's hello@whatbitcoindid.com. Outside of that, have a great weekend.